morning. Let me remind you that trading's risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hey, good morning. Como talifo? Jumbo. Ni hao ma. G'day, mate. Hello. Oh, yeah. How's your moon? Hey, my name is Wayne McDonald. I am the Chief FX Market Strategist for TradersWay.com. Thank you very much for being a client. Boom! I'm here to work my butt off to help you become a success. Also, I'm here to encourage you to fall in love with Forex as I have. It's addictive. Right? It's addictive. I suppose that's why there's a warning label, right? Past performance does not predict future results. Yesterday might have been awesome. Today is a new day. So you always got to be careful. Also, you got to fall in love with the long term. Just love being a trader. So I hope you took the opportunity to read the media minutes, for example, or at least ponder them or whatnot. Just enjoy being a Forex trader, a global macroeconomic trader. Right? Anyways, so please get involved, ask questions. We can cover certain pairs, we can cover certain topics, but the overriding goal of doing these webinars on behalf of Traders Way is to help you. I've been charged with the duties of helping you become a successful trader. And then, once you do become a successful trader, we're hoping that you pay it back by opening a live account and trading with Traders Way. You can have a fixed spread account, a variable spread account, an ECN account where they don't pay spreads. Whatever you want, man, we got it for you. So anyways, the best way to do that is to get involved. That's how you become successful. Step 1, visit tradersway.com, download MT4 from your back office after you open up, let's say, a demo account. Then step 2, in the link below this video, you can download MT4 templates and profiles and indicators, including my pivot points. And then you install that on your Traders Way MT4 and you're golden. Your charts look like mine. And 3, blood, sweat, and tears for years. Maybe you'll become a success. Here's something that's not on the downloadable template, but I found this old template. It's pretty. And if you're trading price action, it's enough. There's with the pivot points. I added those. I mean, you don't need them, but so I can delete them. But I need pivot points to trade. But to me, they're pretty much the same as using a moving average or anything like that. Like I see what I need to see, and then of course, you know, there's your M3. Here's the target. It's pretty close. M3. There's your short zone. Pretty close. Of course, if you're a bull, you go the other way. There's your M2. There's your target. Cool. Good enough. You don't need oscillators really. You don't need your MACD really. You don't need your stochastics really, or RSI, or whatever you feel comfortable with. You know, you don't really need the moving averages. But I really do need pivot points. So, g'day, Gary. How are ya? Cool. We'll go through the yens. Nothing. Yeah. Well, this pair eventually moved, but if you recall earlier, I would say, I don't know if it was last week, I kind of lost interest. But anyways, at the beginning of this week, it's opened in a bullish zone. Of course, it very quickly became into a bearish zone. So remember, they're not telling you what to do. And really, most indicators don't tell you what to do. There are lots that they claim to tell you what to do, and then they make them print these little up arrows and stuff, but that's nonsense. Right? For example, if your trading robot, whatever you want to call it, your indicator, whatever you want to call it, is making the decisions, then I would just fire your ass and keep all the money for myself. Right? If that was enough, right? If you were a trader at a firm, what? Right? So most indicators, if not all indicators, I hate saying all, but most sounds like a washout as well. Okay, but let's say 99.9999% of the time. The indicators provide information, things like support and resistance. Where are things normal? Let's say within 2 standard deviations. So to do 2 standard deviation, you square the variance, right? And then you get your normal. This is a normal distance from average. This is a normal distance from average, right? And then all of a sudden, if you're down here, there's this idea that eventually you'll revert back to the mean. Of course, the mean is moving, but still, you'll revert back. And all these different statistical. I'm really enjoying studying them in school right now. But it's statistical analysis. It doesn't tell you. For example, if you're trying to test whether a drug works or not, you do a study, and maybe you do a double-blind study where the doctors don't know if they're giving you a placebo or not, the patients don't know if they're receiving a placebo or not, and then you do the stats, and at the end it spits out statistics, but it doesn't tell you. A human has to come in and make the interpretation of the data, right? So what I'm getting at is nothing on this chart should tell you whether to be a bull or a bear. Now, you could probably argue that, and Price is right, blah, 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 blah. Great. I'm not even listening. I'm too old for that nonsense. So, like, even if you believe technical analysis was the sort of the creator of all things, you'd still be foolish to ignore fundamentals. Like, you're an expert, but you're like, yeah, I don't even want to study that. Right? It's like you want to be a physicist, but you don't believe in algebra. So, I'm like, whoa. So long story short, my belief system is that all of this is created by fundamentals first, right? And we use technical analysis to confirm things like support or resistance, or look at patterns, or confirm things, but it doesn't tell you. You're gathering the statistics, if you will. The 200 EMA doesn't tell you anything except what the algorithm of the 200 EMA moving average, right? The exponential of the last 200 periods and stuff like that. The stochastics is not telling you to be a bull or a bear. It's just measuring where this candle is relative to the last previous candles. And apparently it's a little overbought, if you will, but it's not even, we're even making the interpretation that means overbought. So if you'd started the week as a bull, you had an opportunity to buy. Now, if you started the week as a bear, you had an opportunity to sell. Okay? That's it. That's it. You made the decision. Therefore, if you're trading other people's money, you get paid. Why? Because of your algorithms? No. Right? Because you use the stochastics? No, stochastics doesn't get paid, nor does it take vacation. Right? So you're the one that analyzes both technicals and fundamentals and determines the direction, and off we go. So anyways, I felt like fundamentally I was sort of ambivalent at best, or indifferent, or really just not even interested. So, but maybe that was the wrong decision. If you're a bull, however, you had at least 2 opportunities to buy this week. And based on your buying, this was the target. Oh, can you see the blue I already drew up there for you guys, right? So that was your week. What'd you do this week? Oh, well, I bought it here. I got out there. I was done. You should be like Ehor in your trading, right? Not like Tigger. I bought the early yen again. I went from the pivot to the target. I haven't had anything to do for 24 hours. Right? What'd you do the rest of the week? This is where we talk about you should volunteer at a museum. You should be a docent at the local museum. Right? Richie walks into the museum and they're like, who's that? Oh, he nice. Right? Yeah, you're nice because you work one day by creating a trade plan either on a Monday or a Tuesday morning, and by Wednesday afternoon you were done for the week. Right? Living the life. Right? Living the life. What'd you do this week? Bought the early yen. It went up. Made money. It was nice. Okay. I look at this and I see lack of conviction in any sort of trend. It doesn't mean you ignore it. For me, maybe I tend to want to look for something trending a lot better than that. But let's say you had to trade it or you love to trade it or whatever. In here, I find it difficult, almost like a 50-50 chance if it goes to either side of the range. But, you know, if you drill into a 5-minute chart, I'm sure you'll find the price action that says more up than down. But that's your call. That's your tactical difference. Okay. Aussie? Azabu one? Who asked for Aussie? Yeah, Aussie? Sure, Azabu. Cool. So let me zoom in. Let's move from a 4-hour to a 1-hour, or even a 15-minute. Give it a click. I guess that's good. All right, check this out. Front run, right? M2 front run. Target. That's sick, right? Can you see that? That's sick, right? Look at that. Are you kidding me? Here's your second chance entry on a Tuesday. Is that right? Yeah, I just watched that movie with my kids, the new version with the Star Wars dude, Ewan McGregor. Anyways, I said to them, hey kids, do you remember when you were just itty bitty? I would read Winnie the Pooh, and I said it was the most difficult book because there's 7 characters or something like that, and I did all the voices. I can't get the honey from the honey pot. Right? Like, can you imagine reading those books? Right? Wow. It gets really to get all the voices straight. Oh dear, I'm gonna go. You're Aussie? Yeah, that's cool. Renko, Wayne, do you have a favorite pair to trade and why? I like the ones that make me money. And I know that sounds facetious, but a favorite pair changes with the fundamentals. So I'll give you one example. I forget what year it was even, but it was the Swiss franc. I'm trying to think of where I was. I can almost always remember the charts. But there was was it the Swiss National Bank? It wasn't against the euro. It was some it wasn't when the peg broke. But anyways, for whatever reason I can't remember anymore. It was the Swiss franc. And that one particular year I traded like 1,000% more than most years trading the Swiss franc. I couldn't get enough Swiss franc. There was another period where it was the Aussie, because Governor Stevens would come out and say, all right, we're at 92 versus the American dollar, but it's only worth 82. It would drop by 1,000, and then he'd come out again, and then it's not worth 82, it's worth 72, and it was just fantastic. So you just sold the Aussie. Like you start running out of things to sell, right? So you're selling Aussie yen and Aussie dollar, and Aussie Swiss franc, right? But then all of a sudden you're looking at all kinds of pairs. Anything with an Aussie, you're just scrounging around. How can I dump the Aussie, right? Aussie Thai baht, dump it, right? So that's what it matters. Naeem asks, can chart patterns have more than a 70% win rate? Well, I don't see why not. But just even the question, like, what do you mean by chart patterns? It doesn't sound right. It sounds like you've come from a different land, a different guru or something. But I can't imagine a bunch of professional traders having lunch talking about their chart pattern. Right? So like when people come to this business, they don't know technical analysis, they don't know fundamental analysis. So they start to learn, and obviously they typically start to learn technicals. But then they become very mechanical, and they start like learning patterns. And I don't mean this to look like a butterfly pattern or something, but they start measuring this, and this has a certain thing, and that has a certain thing, and this has a certain thing to this, and that should mean that, and this, and they become very mechanical. And I fear, and maybe it's even your question, maybe I'm confirming exactly what you thought, but people become so mechanical that they don't know what the hell they're talking about. Like they refuse to read the meeting minutes from the Fed, and the Fed will tell you what to do. And do you remember I opened up the Board of Governors website, and they actually give you a one-page download of the Fed's strategy for monetary policy? Like they even print it and give it to you. And people ignore that, but then they get caught into, what does this pattern mean? And what does the MACD tell me? MACD doesn't tell you anything, right? Double bottoms and double tops, but what are those? It's just support and resistance. So my fear, though, when you ask that question, is a lot of people say, look, like, I'll go back in time. Back when I was first new at this, there was a guy, he had books like this big, and his shtick was he went to Japan and learned candlestick patterns. And he translated the secret Japanese texts, right? And for only $500, you can buy the book. I'm not joking. The book was $500. You could buy the book for $500, and it has all 27,000 chart patterns. And I'm like, well, on the face of it, that's stupid, right? So anyways, I don't know if you're getting there or not, but look, dude. So going to Nassim, if you simply bought at support and resistance, your percentage of wins would likely go up, no matter what the pattern is. I mean, right? So I don't want you to get too caught up on patterns. I want you to get caught up in understanding the way that the markets move, the way that markets are interconnected. What happens when oil falls and rises? And why does oil fall and rises? Who's buying the oil? Who's receiving the money in exchange for the oil? Right? And those are fundamentals, but just like little things, like I'm amazed that some of you guys just, you still don't know price action, something as simple as price action. And those are the things that hold you back, just understanding how the market flows. And I don't mean from central bank to central bank, but just like up and down, just price action and the difference between a 4-hour and a 15-minute chart and how to line them up. Those are the things holding you back, not a pattern. And you certainly shouldn't waste your time looking for patterns that are like you're saying, like 70% or better. Okay? It's not that there are not patterns that work that well. It's that you're wasting your time looking for patterns. And to me, I interpret that as like looking for an EA that does the trading for you, or looking for an EA that makes the decisions for you. If you just had that one pattern, all you would do is blindly look at that one pattern. But I don't want you to blindly look at the markets. I want you to develop a career with real skills that are marketable and worth money. That you can provide a service for someone, that you have the capability of making decisions for someone that has really complicated problems and with a lot of money on the line, and they're willing to pay you a lot. Okay? So anyways, I'm not poo-pooing on patterns. I'm poo-pooing on the idea where it felt like you were bringing something to the table that I think was harmful for you. And I might be reading into the way you asked your question and all that kind of stuff. And if I have, I apologize. But I want you to focus on understanding how and why the market moves, and then you start to apply patterns. That's right, Jimbo. I didn't poo-poo on EAs. I poo-poo on EAs as a crutch for understanding, because here's the thing. I could come out with an EA and come up with stats to show that I can make it work 70% of the time. And if you just pay me money, you can plug and play into MT4. You can sit back and relax and get rich. And I could sell that all day long, especially if I'm willing to whore out my name and my reputation. Right? And I'm telling you the opposite. Like, okay, EAs are helpful. Oh, for sure. But I'm not selling you smoke and mirrors and a whatever. Right? I want you to become an expert. And then as an expert, then you can use EAs to make some of your, tasks more efficient. Naeem says, what? Can you please tell us manually support and resistance is better than pivot? No, they're different. So, all right. So first of all, I can tell you're new here. Because I have videos and training courses that you can go through and start learning things, Naeem. But for example, most people here have heard 1,000 times that there are two different levels. There's two different types of support and resistance in the market. Okay. One is based on price. And that's where you're looking at common levels that have rejected price in the past, and you're trying to line them up visually. So this was a top, and this was a top, and that was a bottom, and this was a top, right? So there's something going on in these levels, and you're just simply looking at price. So you might say this looks like it could definitely, right? This could be a double top. Cool. And you can see I've done some of that on here. Okay, so you're looking at price only, but you're identifying price levels in the past that may be important in the future. Okay? And then the other thing I look is market. And that's where pivots come in. They are also support and resistance. But support and resistance is looking at the last period. So let's say this high and this low. Okay? And then it looks at the close. And from that, it's doing calculations to anticipate, based on what's happened in the recent past in the market, the high of last week or last month, I guess that's week, the high of that week, the low of that week, and whether the market sentiment was at the end of the week. And from that, it does some basic calculations and says, okay, If it's a bear, this is where bears should take profit. If the market's bullish, this is where bulls should take profit. And it does some other calculations. So here's the weighted average, here's support, here's resistance, right? Here's the midpoints from those, because once you got your S&R calculated, you can do your M lines. And it does calculations. So based on what the market did last week, it can try to anticipate or predict what the market is likely to do this week, if things stay the same, right? And so which one's better? Well, there is no better. They're both. They just is. There is no relativeness, right? So like, for example, you plug in the algorithm and 100% of the time, without fail, it spits out the answers. Whatever you've programmed it to show you, it shows you 100% of the time. Which one's better? They're not better. They're just statistics. Whatever you asked it, so you're right. So maybe even the pivots are more accurate because it doesn't make mistakes, where your support and resistance may be mistaken. But I'm not going to go philosophical on that. So they're both useful tools. I don't know what that means, Michael. That's interesting. Yeah, I guess I should, right? Jimbo? Instead of a kick-ass community, develop a kiss-ass community. Yeah, that seems pretty boring. I think I'd rather just retire. I preach to teach, because some of you never had this. All right, so anyways, yeah, let's take a look. Let's do Kiwi, and then we'll move on.com. Back in time. There's a bearish setup a bear would have gotten. There's the bearish target. Here's a bullish setup. There's the bullish target. And then what's happened this week? Really nothing, but I guess if you get out of the 4 hour and you want to turn this around. So remember, we're anticipating a decline in the stock market this month, right? Naeem, go to fxbootcamp.com. That's a company that I have owned for 16 years. Okay, so you could, if you were a bear, you have all the right in the world to set this up as a bearish move. Now, it's not an ideal place. Like when you look at the monthlies, we're not quite where we're supposed to be. The weekly wasn't perfect. It was okay. And it's set up off of last week's take profit area. So you could certainly do all of this, especially if you anticipate the stock market to fall. Okay. And even if you're right, it still looks like it's waiting, doesn't it? But at some point, you can become a bear on this if you're already a bear and you're waiting. I would caution you that we're not quite there yet on the support side. Like we haven't broken support, so it's hard to be a bear. But if you were selling it on the upside or took this earlier, this one would have been the best one. You started the week this way, and now your patience are being tested. That's okay, especially off of this kind of area. Yeah, Jimbo, I don't even want joke stuffs up there, right? We don't want anyone paying for junk for sure. Is it waiting for trade info? This is rather large macro even. Well, there's a lot going on in the world, for example. So let's if the Chinese and the Americans put together their MOUs this week in anticipation of a trade deal being signed between the country leaders soon, and or tariffs are reduced or removed. In particular, I think the U.S. says that they'll get rid of some of the tariffs on the grains. All that's good for macroeconomics. Now, grains perhaps don't directly affect either of these. I mean, they kind of do, but they kind of don't. It's still good for business. And that's what we're really interested, guys. We're really interested in global business. That's what we do as currency traders. And so are tariffs good for business? No. Is removing tariffs good for business? Yes. So when we get news that's good for business, Kiwi yen will go up, risk on. So really, when I say you should study macroeconomics and central banking policy, really it always comes down, I was going to say in the essence, but even directly, it comes down to risk on or risk off. Okay, that's it. So right now, the market's basically telling you that this is a fair price. Okay, and so is it waiting? Well, that's the fair price. So now you got to convince people to buy Kiwi or buy Japanese yen. Okay, good news tends to be good for Kiwi. Bad news tends to be good for yen. Right? So I kind of just look at it like this is floating around in fair. And of course, when you look at the 200 EMA, we are at fair market value on the 1 hour chart. Okay. Now, sometimes though, if you're looking at like the daily chart or a 4 hour chart, what you find is even though nothing's happening over the last, let's say 2 days, on a longer term chart, it's just allowing the, let's say the 21 EMA to catch up because it's a laggard, right? And really, you know, you're on a short time frame, you're getting a counter trend, and this is where amateurs tend to miss it. You know, they see down for 2 days and they think it's bearish, where of course all it's doing is coming back to the moving average and going back up here. And amateurs on a 15-minute chart never see it coming. Right? This is why it can fall for 2 days and still be bullish. Fake trade. Letitia, is that to me? I didn't catch the earlier. Cool. So anyways, just let it develop. Look at a higher time frame. Ask yourself, really, do you want to be a bull? Do you want to be a bear? Where's the support and resistance? Best thing to do is ask questions. Like, for example, that could be key, huh? Well, that's what the 200 EMA is, Michael. So like in my book I wrote 100 years ago, that's how I described the 200 EMA. It is the fair market value. So what, you know, one of the things is like the 200 EMA is a target, not an entry. So, right, and I give a story about like the tension drawn against a bow. Okay, but anyways, once you get to this price, the bulls and bears agree. So one way of thinking of it, Michael, is when you're at that price, where's the market going to go after that? Is it going to go up or is it going to go down if both the bulls and bears agree? And the thing is, well, you'd never know. Like, well, we don't know who's going to take control and drive it, right? So that's the thing. That's why it's a target and not an entry. A lot of people will like hit the 200 EMA and then buy, like, I bought it at. And they're like, whoa, whoa. It doesn't mean anything, right? No, no, no. They're not getting a good deal, Michael. That's the price. Nobody wants. That's the fair price. It's not a deal at all. It's the opposite of a good deal. Well, no, I guess the opposite of a good deal is a bad deal. That's fair. That's just some fair market value. Right? Well, Joshua, put it this way: if people do less business with whatever tariffed country, then less money is going to go to that country. Okay, so like Iranian oil, let's say there's a tariff on it instead of a ban, and let's say there's a $25 per barrel tariff on Iranian oil. Now I can legally buy it, I just have to pay the tariff. So how much oil will I buy from Iran? Well, it depends if I can get oil from somewhere else. Because the marginal utility of Iranian oil versus Algerian oil versus Iraqi oil versus Saudi oil, they're pretty close. Although like Nigerians have the best oil and Saudi has sour crude. And so maybe I prefer Nigerian oil, or Canadian oil is also mostly light sweet. So maybe I prefer Canadian oil over and Nigerian oil over other, but that has to do with refining and stuff. But let's say a barrel of oil is a barrel of oil. The marginal utility per barrel is going to be the same. So I have to do my analysis, my marginal utility per dollar spent, right? And I'm going to get less utility out of Iranian oil because the price is too high. And I'm like, well, I'd rather just buy Iraqi oil and not pay the $25 per barrel tariff, right? So what ends up happening is I do less business with Iran. I don't buy oil from Iran with my money. So Iran doesn't get my money. They're going to have to drink their oil this month, right? And then instead I go to Iraq and I give them my money. But before I give them my American money, I'm going to have to convert that to Iraqi dinar and then pay them their dinar and then take the oil away. So the money goes to that economy, right? So if there's tariffs, it diminishes the flow of money, and it could even divert the flow of money. So it could even be a small deal, like there might be a tax of, let's say, a tariff of $1 per barrel. But like, why would I pay 54 when I can pay 53 everywhere else, right? Who are you talking about, Nitish? I must be missing the conversation. I keep looking down and I'm like, what's Nitish talking about? So anyways, that's all. So the 200 EMA is just a fair market value and all that kind of stuff. So if you want to be a bear up high, I get your reasoning. Set it up. Have we got the complete setup quite yet? No, but you can start doing lower low, lower high type things and set up maybe the next short could be an opportunity if you're a bear, right? Yeah. Oh, my pleasure. Now, yeah, Brooke's gonna, yeah, Wayne, calculating your position. Yeah, well, Brooke, I suppose it really depends, Brooke. Brooke's saying in calculating position size, do you use the equity or balance? That's a judgment call. It really depends, but I would go off of essentially the equity because you can trade your floating profit and loss money, and it's one major benefit of Forex, right? Where if you're trading a stock market and you have $1 million and you buy $1 million worth of stock and your portfolio is up 10%, you cannot buy more because you can't trade your equity. You don't have any money in your account. You have $1 million worth of stock worth 1,100,000. Now in Forex, you can trade it. Yeah, which is fantastic, right? Yeah. But it depends. Like at some point, you'll never be able to deploy all your money, right? And you won't need to, nor will it matter. But with smaller accounts that you're trying to grow, yeah, you go ahead and use it. But, you know, so like imagine, so I haven't done this in the last few years, but several years ago, for example, I had like 130 open trades, something like that. And I had 98% margin available. Had 98% of my money still in my account that I hadn't touched. That's the difference between you know, equity and balance. And so what that tells you is that I had all those trades open, but they were all profitable except for the ones I just entered in the last day or two, and they hadn't become profitable yet. So I was essentially, I kept trading the profits that the earlier trades were making. And of course, when bad trades happened, like trades didn't, it's not that all my trades were profitable. It's just I cut all my losers when they were still small, and I'm letting all my winners run. Yeah, 54 trades open. Now, I hope like 45 of them are profitable or more. Okay. I know lots of people too that have shown me like, you know, because I've analyzed the trading history of, I don't know, 200 traders, maybe more. And even people I trust and respect a lot sent me their trading history, and I looked at it, I'm like, no freaking way am I giving you money. Because they might have that many trades open, but at least half of them were not profitable. Yeah, they're all in profit. So that's what you're supposed to be doing, bro. That's exactly what that's called portfolio, right? That's the portfolio management thing. That's exactly what you're supposed to do. So in that case, yeah, you're trading the profits. I like to think of it as the bank's money. I don't even know what that means, but like the bank's money, it's like you still have your $10,000 in your account. You haven't even really touched it, you know, and you got, you know, 15,000 in floating profit. Well, you're really just trading the 15,000, right? So anyways. Right. And that's how it goes. I mean, but Brooke, that's how you do it. Right? MT4, you just run a report. Or you hook yourself up with like, what is it? MyFX book? Something like that? Yeah, you're doing it right, Brooke. You know, Brooke, I don't know if this has happened to you yet. Probably has if you're trading well. But some of the loneliest, like it's amazing how, you know, people tell you not to be emotional. And that's true. I like to make logical, intelligent decisions. But there's nothing more lonely. I suppose there's a few things more lonely. But one of the loneliest things as a trader is getting out of every single one of your trades. Because some of those trades you probably have nursed for weeks or even months. So I remember like when you get out of 100, 150 trades that you've been nursing for months and months and months, and then they're all gone. Like you open up your account and there's no trades. It's a sad, it's like literally like you mourn for your trades. Like, fuck. Like, you're just used to waking up. You're like, oh, I made 500 pips today and I haven't even done anything. I haven't even taken a shower yet and I'm up 500 pips for the day, right? And then all of a sudden you're like, now what am I going to do? It's going to take me months to build a portfolio again. And then, of course, when you get out of trades, when you've killed your portfolio and you're rebuilding, your next couple of months are going to be flat or even negative because more of your trades that you get out are going to be losers than winners because you're not trying to get out of your winners, but you are trying to get out of your losers. So like 1 month you might have this massive, incredibly profitable month. And the next one you're like -3. Well, it's because you cut out of all those losing trades. Now you might have, so let's say you had 20 losing trades and you might have 15 floating winning trades that are significantly bigger, but it's what you're booking, right? It's hard to book the float. So anyways, and then the next month is slightly profitable. And then the next month after that is more profitable, right? And then again, you build it up for 3 or 4 months. Then you take a massive, you dump your position and you have a huge month again. That's why you get like -3, +3, +5, +20, -3, right? That's what your month's going to look like. It's because you over time you build up these positions and then you cash them out. Is that right, Ed? Well played, sir. Yeah, Jimbo. Right on, Jimbo. African Queen, no, don't send me your trade history. If you want someone to review your trading, at FX Bootcamp, we have a trader performance analysis process where you go through and we not just look at your trade history, but how you set up trades and trade planning and all that kind of stuff, and run you through the bootcamp course. And at the other end, you'll sit down with someone to review your skills with you. Okay, I don't have time, the African Queen. Right, I do this, I do some other business stuff, and I'm a full-time student at Harvard doing 2 degrees at the same time. I mean, I don't have time, man. Yeah, I don't have time. Anyways, cool. Brooke, you asked me to cover something. What was it? It was like Euro Aussie or something? Let me try to do that. Yeah, Ed says my FX book is awesome. Check it out. Yeah, it's become the standard, right? Like that's just the standard. So definitely. Oh yeah. You like that? The standard is like oh, I guess the easiest way is to just do this. Okay, that's the standard. I add the pivot points. Yeah, this is an old template from somewhere. Somewhere. Okay. To me, it works the same as the moving averages, really. I don't really care. I mean, you buy the dip, right? You buy the dip. I mean, it's all the same. It is pretty. I like this part where it looks 3-dimensional. Don't you love how people walk in, they've spent 1 hour with me, and they're happy to call me a scumbag? Assume, what would you do if I walked into your house with your family sitting around a table and I called you a scumbag? Like, I don't know this guy, but he's a scumbag. I mean, it's just, what kind of person are you? I mean, really, your mother, I'm sure, would be ashamed that you're that type of person to walk in and start calling people names and you don't even know them. Amazing. So anyways, Brooke, what you asked me like 2 or 3 times to cover something. It was like an Aussie something. Let me know what that is. Yeah, no, but it's weird. Like, people are strange. I mean, they must eventually feel bad or something. Cool. So if I'm not teaching enough, I apologize. I really am trying to teach you guys how to trade. And maybe even be a little bit entertaining at the same time, but so anyways, right? This is what we set up, what, a day or 2 ago? So now is your opportunity. If you're a bull, that's your first one, right? Plan A is off the, right? But remember, we did this maybe yesterday. I guess it would have been yesterday. Okay, this is your area here. That's your plan A. If you're a bull, obviously. Plan B is going to be down here. Okay, and probably not till Friday, which means it's going to be a Monday front run or Friday front run, that kind of stuff. That's all right, Pedro. You don't need it. Or the better thing, Pedro, would be to take the swing trading course. Okay. Yeah, and Pedro, like, to be fair, I mean, I wrote that book. The book was published 10 years ago, so I wrote it 11 years ago. So I'm sure I could have done a better job. I mean, I'm not a professional writer, and that was my first book. But I think you're going to get a lot more detail in the training course because it's not, it's not a 200-page book. It's a 20-hour video course. So you're going to see more real-world examples and stuff like that. Sharon, what's my opinion on crypto trading? I've never traded a cryptocurrency, so I don't know if they're same or different. I just don't know. I apologize. Okay. Yeah. Also, I don't really use Fibbits anymore. I mean, that was something I invented a million years ago, and it was helpful at the time. And again, a lot of it is, there, whether this is a 50% or a pivot point or a role reversal, I mean, it's all the same thing, right? Like, one of the things I find frustrating in school is that they're like, in the math, there's 3 or 4 different ways mathematically to describe the same thing. And so the formulas can change. And they're like, oh, well, it's not the negative of the MRS, right? You can also express this as the blah, 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 blah versus la, 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 la. And, like, it's not just a 50% retracement, but you could use the formula for pivot points and get the same thing. And so after a while, I kind of, like, everything is true. All those things are true. But maybe over the last, another 11 years have passed since I've written that book, which means I've been trading every day. using the same tools in the same way, but I boil it down to even more simplicity. I don't know if I'm explaining that right. So like a Fibit. Yeah, man, I haven't done that in such a long time. And that's part of my Asian trade fade setup. But, you know, my trading now is like day trading and weekly swing, like day swing trading, weekly swing trading, monthly swing trading are the vast majority of what I do now. And maybe it's because I'm in grad school and such where I have less time than I used to. You know, it's not like all I do 24 hours a day is trading anymore. That's what I used to be like. I barely slept. Now I do school too. So I have to say, it's almost like I have a job, right? Like a lot of people in our community, they have jobs, right? So they're like, man, I can't sit here and scalp for 6 or 7 or 8 hours straight in the middle of the day or in the middle of the night. You're just like, I can't do that. I got my JOB and stuff. Well, I have a full-time job at Harvard, right? Right? So I trade based on limited time, limited resources, right? And so I might, it's not that I tweak the tools, I tweak the time. Like I pick the time to trade, right? There are times to trade at the opening of the day, at the opening of the week, at the opening of the month, and all that kind of stuff, right? All right, Nitish, you've outworn your welcome. Goodbye. Man. Yeah, sure, trade. Yeah, I think they expire in a year. Yeah, Peter's been in school a bajillion years studying all kinds of things, right? You finished your Series 3, finished all that kind of stuff. Yeah, I studied hard for my Series 3 as well. That took a lot of effort, the Series 3. But yeah, school is just a grind. I mean, to sign up for a 4-year program is a grind. I mean, it really is a job. So yeah, so I don't have the luxury of sitting and trading. I mean, for hours and hours and hours on end. Like think of it. I spent a whole year trading the 1-minute chart. You know, so I was doing 30 or 40 or 50 trades a day. You know, I don't do that now, but I actually miss it a lot. But going through and setting up like day trades, oh, wonderful. And these weekly swings, oh my God, we've had some good ones. We've had some bad weeks. Excuse me. We've had some bad weeks, but many of them have been quite good weeks. So that's if you have a day job, right? If you have a 9 to 5 type job, swing trading's the only way to go. Because it doesn't mean you don't learn how to scalp, but like I scalp into all my trades because it's like fine tuning your entries. If you know how to trade on a 1-minute chart and a 5-minute chart, you're going to get into your trade 10 or 15 or 20 pips earlier than someone that doesn't know how to scalp, right? So, hey, an extra, let's say 10 pips per trade on every trade over the course of a year could be 10,000 pips. Well, that would be 1,000 trades. Well, yeah, actually, yeah. It could be 10,000 pips. Not making any more trades, just trading better, right? So anyway, so what you need to do is get into swing trading if you have a day job. Okay. So you don't think that's a 3-wave correction, Michael? Gold drop. So we have this as a buy, as you know. So that's funny. You're like, you were surprised gold would drop. Well, you should never be surprised gold drops in an uptrend because it always retraces. The thing is, you should be not surprised that it's dropping, but you should be identifying the most logical places to buy it. Peter says Series 3, Series 34. Yeah. Yeah. And you're a good trader too, Peter. So yeah, it's hard to put all that in and all that kind of stuff, but that's just how it is. Oh, it's an indicator. Oh, yeah. No. That's, we give you the indicator. You can download my charts right below. You can download them for free. Okay, cool. So that's just gold. So if you remember yesterday, I described it this way. I think I did it this way, right? Up, consolidate, up, consolidate, up, consolidate, up, consolidate, up. Is that reasonable? Oh, you don't trade with MT4? Yeah, graduation. Yeah, I have my first graduation in May too. I just, I'm getting emails about renting my cap and gown and stuff. I'm like, oh, really? Gonna have to fly my mom out so she can see me graduate. It's just funny. No, the Series 7. Yeah, my wife's got the Series 7, and she had to get it a second time because she took a gap off for kids and stuff. Anyways, yeah, she studied hard for that, but it's really, really, really changed. Series 7 went from learning how to trade stocks to now memorizing the 20,000 stupid rules. And I think Series 3 has gone that way too, where it's a lot less than an elevator, grain operator, hedging, physical grain prices with options, strangling and straddling. Right now, it's like there are 20,000 rules. We're going to test you to make sure you know all 20,000. Cedric, do you use tools to calculate your lot size? Lower your lot size as much as you possibly can. So I don't change my lot size by looking at things like, well, if I go put a stop there and that goes to there and then I'll do that. No, I trade the same size almost always. And it has to do with lot size relative to account size. Right. So for example, I've told you guys this before, but a hard and fast rule for every 100,000 in cash in your account, I used to trade 1 mini. Which makes you laugh, I'm sure, because you're probably trading 5 minis and you probably have 5,000 in your account. Right. But anyways, so if you have like $1 million, you're only trading one standard lot. I know, right? Then you're like, well, how do you make any money? Well, there's two ways, right? You can have a huge lot size, so you're trading 10 lots, right? You're trading 10 lots and you only have $10,000 in your account. Or like Brooke's doing, you have 100 open trades with 1 mini or whatever makes sense, right? So now you have 100 minis and making tons of money, but each trade goes from very minimal risk, But then once the trade's profitable, you move it to break even and you have essentially no risk at all. You have 100 open trades and no risk. Where one person's maybe trades 10 standard lots, and every time they pull the trigger, they face huge risk because they can't even afford a 25 pip loss. And what they're trying to do is make a 25 pip win, and then they feel so rich. Where Brooks is sitting on 50 trades, he's just moving along, moving along, moving along. And that's the way to do it. Sure Trade, well, they're just, the video is YouTube, so I don't know why your YouTube video wouldn't work. I mean, it's literally sitting on YouTube. But yeah, how do you install an indicator is really what you're asking. Let me just do that. Go File, Open Data Folder. Okay? So when you unzip your folder, there's a folder that says templates. Open those templates and put them in the template folder. Then open the one that says profile, grab everything in the profile folder and drag it into your profile folder. 2/3 done. Then there's another one called experts. To get to your experts, you have to open MQL4 and drag them into your experts folder, and now you're done. I'll do it again. You go to File, Open Data Folder. Your template files go in the template folder. Your profile folders go in your profile folders. Your experts, you have to click on MQL4 and then put it in your experts folder. Done. Literally takes that long. Yeah, Jimbo, I'm good with that. Jimbo says, lose 20 trades in a row and you're down 1 or 2%. Perfect. And you take a break. Right, Jimbo? You take a break and you go, what the heck is going on here? Another way of answering your lot size is, say, look on how many trades you make average. There you go, sure trade. Yeah, yeah. Oh, yeah, and then close MT4 and start it again. Yeah. Another way of looking at your lot size is decide in your trade history that you want to show on your 3-year track record. So let's say 3 years from now, you want to show a potential investor your track record. Reverse engineer the whole thing. Over the course of 3 years, there's going to be 1 month that's going to be your worst month. Let me tell you, professional traders really don't care about your winning months because you're supposed to win. And if you have a big month, usually risk adjusted, it's really, really bad. So they just want to see consistent small returns month over month. So really what they're looking for in your trade history is they want to see what happens when everything goes wrong. So you have to decide now what that horrible month is going to be, your worst month over the last 3 years. Now, remember, if you can convince people 3 or 4 or 5 years from now to give you lots and lots of money, and you don't have lots of money now, well, that's a real career for you. Now you'll have a business. You'll be managing lots of money, and you're going to earn a good income. And then if you do them right, they're going to bring their richer friends along, and it all snowballs in a very positive upward spiral. You'll be lifted up by this, and you'll be treated very handsomely, financially. So anyways, it all starts with how bad is your worst. You have to decide, is your worst month going to be 3%? Is your worst month going to be 5%? Is your worst month going to be 10%? And in my humble opinion, if you have a negative 20 in your history, it ain't going to happen. So it can't be that. So your worst month is going to be somewhere between negative 10% and let's say even negative 5%. Okay. So then say if the vast majority, if not all your trades in 1 month went bad, based on your lot size and the number of trades you make, that should add up to your worst month ever, because what's the likelihood you're going to make 40 bad trades in a row? It's plausible. More likely you're going to screw up and not have the guts to get out of a losing trade, and it's going to compound, and in that case you're not worth it anyways, right? So you have to reverse engineer and say, if I make 2 trades a day, that's 40 trades a month. So let's say you make 50 trades a month, and all 50 are bad. What does that add up to? 50 pips, average loss, right? Or 50 trades, average loss each, 50 pips. 2,500 pips is your loss. So what is that, 2.5%? Is that 5%? If you lost 2,500 pips in a month, what percentage based on the amount of money are you managing is that, and what would you like it to be? And you might say, I'm okay with a 2.5% loss. And I'm saying, yeah, actually that's pretty good. Great. And so you finagle your lot size based on that. So now you know, like, dude, if every trade I make this month fails, I can recover. But that also then dictates how much money you're likely to make on a good month. Which means if you make 50 pips on all of these, you're going to make 2,500. And that's up 2.5%. Well, that's fine. But the thing is, you only make 50 pips per trade? Really? Golly, that's sad, right? So now you need to learn how to swing trade. So some of your trades are 100 pips, some of your trades are 300 pips, so on and so forth, because then your awesome months end up being 10%, and your horrific months are minus 2.5%. And if you can do that somewhere in between over and over and over again, eventually you'll become filthy, stinking rich if you live to be long enough. Live to be long enough. Live long enough to be old, let's say, if you live long enough. Yeah. Because if you're 90, it might take you 10 years, right? But if you're 30 or 40, this is a business for you. This is something that's going to lead you into retirement. So you definitely have 5 years to 10 years to build your business. Now, once you get your trading under control, that's easy, by the way. Learning how to raise money and manage clients and manage compliance, that's the difficult side of trading. And that would probably be the next thing I do in Forex, is kind of teach those types of classes. Because I just don't see, I just don't see organizations that are bringing in lawyers and accountants and compliance regulatory people, teaching you how to actually build the company. And then, so I used to be a venture capitalist, right? So how many people actually know how to put together a pitch deck related to their Forex thing and convince professional investors and their due diligence team that you're worth being invested into? You're probably not ready for that either, right? So that's a whole new thing, and that's fun. That's something fun. It'd be like a side project for me. I think that'd be fun, but not until I'm done school. Any other, what can we cover today? We did gold, we did oil, we did some of the dollars, we did some of the yens. Did I miss something? A lot of these things are just the same setups as that we set up yesterday. Euro dollar. Did I skip that one? Peter, I have no idea what you're talking about. Yeah, Jimbo says account equity matters. Well, it's all that matters, right? It's all that matters. One of the way I've said it over the years is assets under management, AUM. Okay? That's the secret. So we got some Swissy, some Aussie Kiwi, some Euro Dollar. Well, I certainly should cover Euro Dollar. Oh, thank you for subscribing, guys. Saeed, Pedrag. Okay. Well, as you probably already know, we're right on the M4, so this is a place to take profit. Here's the entry on Tuesday or on Friday. So yeah, you're basically, I mean, your best hope would be R2, but that's not likely. According to the entry, anywhere in this pink zone you're supposed to get out. But I have a feeling you already knew all that. There's a monthly pivot there. We're at the fair market value. You have redonkulous resistance in your face. So that's all pretty straightforward, right? Yeah, and it's true. Assets under management. Well, I mean, actually, you could say it the other way. I mean, Jimbo, if you only traded your own account and you could, whatever, you're not worried about a yellow Lamborghini. So let's say you have 10,000 in your account and you don't spend it for the first several years and you grow it to more. So 6% a month doubles every year. So 6% a month on average gets you from 10 to 20. And then you can go from 20 to 40. And then you can go from 40 to 80. So in the course of 1,000 days, you've grown it from 10,000 to 80,000. And then maybe after going into year 4, you can start paying yourself a small salary and maybe it's enough to live on. Right? You're not interested in yellow Lamborghinis. So, like, I've taught so many people over the years. I think of one guy, he was a firefighter, and after 9/11, back in 2001, he just couldn't be a firefighter anymore. He was done. And his stress in his life, I think, led to a divorce. In fact, I know this, actually, I know the exact same thing happened to 2 firefighters. They don't know each other. But anyways, the stress after 9/11 and all that kind of stuff, their marriages fell apart, whatever. But anyways, the guy that was a Forex trader, he was an FX boot camper. And he's like, he started doing well enough in Forex. He said, you know what? He's quit his job as a firefighter. And I'm like, you did what? And he's like, yeah, and it's weird. His dad was a firefighter and everything, going back many years. But anyways, he quit his job and he moved to Thailand. And he continued trading in Thailand. And he's like, everything's cheap here. The medical is better than what you can get in the United States. So he's like, if I get sick or if I get injured or whatever, I'm taken care of here, right? Because in the United States, the number 2 reason for personal bankruptcy is cancer. And that's assuming you have health insurance, you still go bankrupt. But anyway, so he moves to Thailand and he's like, it's awesome here. And he just lived off that. And I know someone else moved to a tiny little town in Brazil and just lived as a Forex trader. Just hunkered down, saved all his money. Right? Jim, which one do you have? Do you have the old one? I updated it, right? It's the one called Auto Stop. Well, SureTrade wants to know when to short this. Well, it's more like why. So you have permission to consider this. This is resistance at a monthly pivot point. This is your take profit zone, just slightly above it. You'll probably get an Arctic turtle like we talked about yesterday and do something like that. But remember, it's a range trade at this point. Okay? So Pedro, they're counter trend trades, Pedro. Yeah. Use the auto stop. Okay. And the other thing, make sure your auto trading is on. You have to have that on before you drag it on. If you drag it on and then turn it on, it still doesn't work. So then you got to delete it and then do it again. But to get it going, you just go here, you go to auto stop. Okay. And again, make sure your auto trading's on. Drag it on. I have it set with the 25 pip stop loss, 50 pip, right? So that's great for like day trading. And so you go like that. And it should be on if it's smiling. So watch this now. I'll sell. And now watch, wait for it. Boom. There's the target. There's the stop. And so if I'm scalping, one of the things I love to do, and it really depends on how I feel, but let's do it this way. I'll do it this way. You can drag on your auto stop. And you can change it to like a 10 pip stop, 15 pip winner. And now you can just scalp. And right? And especially if I'm on a 1 minute chart. So you'll sell it and you're in and out, boom, 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 boom. and you're not even really paying attention, right? You're just trading with your eyes closed. Well, Joshua, what I mean is, if it's an uptrend, and you know it's an uptrend because we're talking about, we're a whisker away from the bullish profit zone, so clearly it's been an uptrend, and you're selling in an uptrend. So if it hasn't reversed yet, then at best you're range bound on the smaller time frame, and at worst you're selling in something that's going to continue up. So I would just highly recommend you don't get in the habit of selling an uptrend. You, of course, can. And the reason for it is, bulls are supposed to take profit in the pink zone here. It's supposed to be red, but they're supposed to be getting out here. So you can anticipate they do, and then you could trade that volume. But it's not the right. It's not the right way to make money. You're never going to get filthy, stinking rich trading against the market, right? Because there's just never enough money in it. Yeah, you can scale out. Caddy? Yeah, you can scale out. Kitty cat? So you could use like limit orders, for example. Throw a 0.1 in front of a standard lot and get it down to 0.9. Yeah, you can shave it off. They call that scaling. I don't do that. And the old joke is that, scaling's for fishermen. If I realize I need to get out, I get out. That's it. I don't like ho and hum about it. Okay. Yeah, but again, Michael, I mean, yeah, that it's the same as building up positions. You can tear down positions too. Now, the worst part of that is if you're in the United States of America. Oh my God, they have something called FIFO, first in, first out. And I really don't understand this rule. FIFO says you can't carry trade. So let's say you put 5 trades in. 1, 2, 3, 4, 5. And let's say they're all profitable. And then you change your mind on this one. You're like, oh, this one's not working out. So you want to get out of this one, right? In the United States, they take this shit out. And you're like, what? That's my good trade. I was going to sit on that for like a year. They're like, no, biatch. We're effing you on this one. You're like, what are you doing? What are you doing? And so the American government comes to you and says, well, we don't prefer that you long-term trade. What? We prefer that you don't trade for the long term. So we're going to make sure that your first trade always comes out first. You're like, but that's the safest trade. I have a stop loss on it. I can't lose money. It's like 1,000 pips away. I want to get out of the trade that's gone bad 10 pips ago. They're like, no, you can't trade long term in the United States. And I just like, oh my God. I just don't understand it. You're like, what are you talking about? Right? But anyways, Jimbo says you can scale out to eliminate. But see, I don't think that way. And I'm not disagreeing with you, Jimbo. We're going back to the scaling conversation now. Like, so you're in one standard lot and you're coming up to what you think is resistance. So let's say you bought a way down here for one standard lot. And it's moving along, everything's good. And now you're worried about it. And you're like, my risk is increasing. I'm really worried that it's going to come down here because of this resistance and so on and so forth. My argument is, well, if it's resistance, why don't you just take profit? Just be done with it. Move on. Go find another trade. Michael, SEC doesn't oversee Forex. It's an NFA rule. And of course, they'll tell you that the rule is there to protect you. The other one that really, I must have lost $10,000 on this other deal, but I actually ran a TV commercial on CNBC and Bloomberg. And all these advertisements have to be pre-approved by the NFA. So anyways, we created the commercial, we hired voice actors and everything. And at the end it said, practice on a demo account, practice on a demo account before trade real money, whatever, how I phrased it. And they're like, you can't say that. I'm like, I know I'm not required to say that, but I felt like it protected the client to say before you trade real money, you should practice on a demo account. They're like, you cannot say that. I'm like, really? But I'm like, it makes sense. Like, before people trade real money, they should practice on a demo account with fake money to see if it works for them or if they have the skills or whatnot. They're like, you cannot say that. I'm like, well, why can't you say that? It's a TV commercial. Like, you should warn people, like, smoking is addictive. You should tell people, like, that is telling people that their past performance will predict future results. Which, that even, to me, is confusing, because, like, well, what do you mean past performance? If I fell off the stairs 5 times in a row, I should be careful the 6th time. Like, I don't know, like, in many cases, past performance does predict future results, but no, it doesn't guarantee future results and stuff. But, like, well, what's technical analysis and stuff, and what's even fundamental analysis, and why do we analyze stocks to pick them? Like, if they've been doing good 6 quarters in a row, I understand it doesn't guarantee the 7th, but shouldn't I do the research? So anyways, it got confusing. They're like, you cannot run that ad when you advise people to start on a demo account first. You have to remove that. So I had to go back, rehire the voice actors. I am not shitting you. Rehire the voice actors and redo the last 15 seconds of the commercial or whatever and go back. And it cost me money. And oh my God, it took 3 weeks or something. And so anyways, I'm not like anti-NFA and stuff, but the rules are there to protect clients, and some of these rules I just don't get it. Like, so I would say to someone, don't scalp when you start to trade. You know, lower your lot size, maybe even start on a demo account. You should probably learn how to swing first and stay in your trades longer term. Therefore, timing is less of an issue. It's more strategic than it is tactical. But in the United States, you can't carry trade. I mean, you can if you like bought pound yen and never bought it again, or bought Kiwi yen and never bought it again, and then you move over, bought Aussie yen, but you can never buy it again because it'll always take you out of your best trade, not your worst trade. And that's the part I don't understand. Like, why wouldn't you advise people to make long-term investments? But anyways. Yeah, so going back to Michael's thing, I've never been a fan of scaling out. That's my personal opinion. If I'm staring at resistance and I go, oh my God, this thing's going to come down, why would I only get out a part of my trade? Like, I need to do the analysis. I don't trade with the fear. If it's resistance and you're long and you're like, this is worrisome, take all your money, put it in your pocket, and take your kids out for ice cream. Be done with it. Right? Or Jim says, or I have several targets. So here's another thing that I used to do a lot, especially when, like if you're using the OCO, for example, like this, buy, 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 and then I'll get out on all of them. And this will have like a 20 pip stop, 20 pip stop, 20 pip stop, 20 pip stop, 20 pip stop. What happens is they're all lagging, right? So this moves up, and this moves up, and this moves up, and this moves up. So if there's a sudden decline, I might lose 20 on one, break even on the second, make 20 on the third, make 20 on the fourth, and I'm out. So, right? So I walk away with 20 or 30 pips or whatever it ends up being. But then what I do is I have an overall target. So if this is the overall target, I keep doing this. And I'm using the OCO. Every time I buy, it goes pa-chow, pa-chow. And then I buy another one and it goes pa-chow, pa-chow. And I'll try to let them go up, right? And have one big target. And then they all come out here when we hit that target, all of them. I don't care where the stop is. Or if there's a massive decline, they all, you know, they'll come out as well because my trade has failed. Or if I'm really bored and it's trending well, usually it's bored. Like if I'm counter trend trading, so like let's say on a daily chart, I know we're doing this, okay? But we're in this period. So I'm a bull, but I'm just waiting. And this might be 3 days, right? So I might be on a 1 minute chart or a 5 minute chart and in this 2 day decline. And I know it's just a decline, but I'm going to, you know, trade it. So again, if you're doing 20 or 30 trades a day, it's just, you're doing something, right? So what I'll do is on this way down is I'll throw it on this OCO. And let's say it's a 20, it could be a 15.30, it could be a 25.50, let's say 25.50. What I'll do is on the way down, I'll just keep doing it. And I'm not touching my stops, I'm not touching my limits. I just go pa-chow, pa-chow. I'm so super lazy, pa-chow. I'm not paying attention to anything, pa-chow, because I don't have any belief that it's coming down long term. So I just enter and it goes minus 25, minus 50. Then I enter another one, minus 25, minus 50. Right? And then, you know, halfway through my third trade, my first trade is out for plus 50. And like I could stay in longer, but I'm not, I don't care that much, right? And so it's just moving along, and I just keep adding. And then I either keep doing it until it stops working or we get it to an obvious level of support where it is going to bounce. And remember, I think it's going to go up. So I'm always worried about approaching this level, and I'll just get out and stop. And, I'm like, I filled 4 hours. I made some money, right? Not in love with anything, but, picked up a couple hundred pips and moved on, right? They're all correct. They're all just tactical means to an end. Okay. Look at all the money I'm making. Boom! Cool, right? It's a scalp. Boom. Anyways, let's pick it up. Pick it up again tomorrow. Great conversation. I love conversations like entering the trades and scaling in and moving stops, hitting profit targets and stuff like that. It's fun. I mean, it's good tactical stuff. So if you want to talk about it again tomorrow, let's do it again tomorrow. Yeah, Jimbo says, I hate being right, but volatility knocks you out. That's a timing issue. And that's why I really love swing trading and stuff. It removes the time factor. So anyways, I'll see you guys tomorrow. Again, thank you for subscribing. Thank you for your loyalty. We only had 2 scumbags today spamming us with their junk. One was a heckler and one was a spammer. That's a pretty good day. Right? That's hardly any pollution at all. So anyways, thank you for the likes. Thank you for the comments and stuff like that. Wayne, did I create this pivot setup? The indicator here that I use now is called Wyatt's Pivots. And Wyatt used to be an FX boot camper, so I taught him how to trade. In particular, I taught him how to trade pivots. And that's why you see these pivots in here, because I did invent pivots. I invented pivots. I also, I didn't invent pivot points because pivot points come from futures trading. But on the old GFT deal book, I think it was the deal book 2, and then later on the deal book 360, I had pivot points custom programmed. I paid a programmer, and I did things like pick this color pink and this color green. I didn't like the brick red and the other green, but if you go back to my videos of like 2004, you see these same colors. Well, it's because I picked them out when the programmer asked me. And I was the guy that actually said to the programmer, because at that time, pivot points were just lines, right? And I'm like, well, I find this really important to me, and I find this level really important to me. Can you make that, can you highlight that somehow? And the first 2 programmers didn't know how to do it. And the 3rd programmer did know how to do it. So, like, I literally was the guy that said, make the M1 to S2 highlighted in green and make this a little, fine. And we had it all custom programmed. And then I started teaching people how to trade pivot points. And I did like the FXCM Trading Expo, which I think was 2006. That was when FXCM tried to do their own conference. And the funny story about that is there were Traders Expos, and someone at FXCM said something to the Expo people, and the Expo people told them to go F themselves. And so FXCM said, well, we're FXCM. We have all the money in the world, so we can do whatever we want. So anyways, egos collided, and they did their own conference. And I was a speaker there. And I remember 2 things about that. One, I did a presentation at 5 o'clock in the morning. And Boris and Kathy were to speak after. And they're like, no one in the world is going to come see your webinar or your 3-hour presentation at 5 o'clock in the morning. And I think something like 200 people showed up, filled the room. It was great. And then the other thing is I went in and I did a speech Rob Booker was in the room next to me, and he was throwing T-shirts out, and he had pictures of like monkeys smoking cigarettes, and he was handing out all these prizes, and people are having all kinds of fun. And then in my room, there were so many people in the room that there were people sitting on the floor in between the aisles and up and around, and 3 people standing at the back of the room. And I did this big long presentation on pivot points. And then someone at the very end said, FXCM's charting package, they used to use what, IntelliCharts or something, like, we don't have pivot points. I'm like, oops. So like, I've been teaching this and these pivots, the exact way they work. I didn't invent pivot points, but these are things that I invented 1,000 years ago. And then Wyatt came along and had them programmed for MT4, because I didn't use MT4 up until about 8 or 9 years ago, right? So I thank you to Wyatt. Oh, they're beautiful. And they work really well. But no, I did not invent them. They came from futures traders that would write their orders on the back of the card. But again, if you take swing trading, if you take the swing trading course, it's all explained, the whole history, how they work, and all that kind of stuff. Right on, Michael. Yeah, but like I said, Michael, this, for me, this goes back in ancient history. Ancient. So I'll give you another example. Several years later, after I had them programmed into FX Bootcamp, into the Dealbook 360 that I taught FX Bootcamp with, so many people were approaching GFT to open accounts. They would open it up, they're like, but I have to have Wayne's pivots. And they're like, what are pivot points? Like, Wayne's pivots. He shows these in all the videos. They're like, I have to have Wayne's pivots. And one day, GFT came to me and they're like, oh my God, we have so many people coming to us and they want your pivots. We don't know what pivot points are. We have the GAN fan, right? We have all this other crap programmed into the like, I still don't know what half this stuff is, or most of this stuff that's pre-programmed in a lot of these things, right? The Arun oscillator, like what is that, right? But they're like, we need these pivot points. So people are like busting down our doors for your pivot points. I'm like, you can have my pivot points for free. So I gave them my CTL code and they programmed it into the Dealbook 360. They did not even pay me a penny. Right? Yeah, I don't know about anything about MT5. I don't know why people switch over. What's wrong? What's the difference between MT4 and MT5? What, that you can buy signals or something? Like, I don't know why people move over to MT5, really. Honestly, I swear to God, I don't know. What's wrong with MT4? Well, it's because they work, NP. So you have to understand that. And the reason pivot points they work better now than even back in the day. And it's because so many people have moved over from futures trading. Because remember, think of all the floor traders. They all lost a job. So what do they do now? Well, they want to trade the same way they trade soybean meal futures, but they want to do it with Forex. You see what I mean? Sure trade, do you sell it? I used to give them out. People used to come to the booth, and I had, let's say, $1,000 worth of beautiful shirts, all different sizes, all different colors, and hats, and all that. And I just give it away to all my boot campers. We used to throw parties called boot camper jamborees and stuff. But I used to go to these shows and I'd drop like $150,000, you know, for fun. It'd be like my vacation. Well, we'd have a good time, throw awesome parties. But Mike says MT5 does it, FIFO if you want that. Well, that's because they need it for U.S. brokers. So if you're in a U.S. broker, they have to follow NFA rules, of course. Was that right, Jim? So yeah, I don't think it's that complicated to create a new chart and template. So one day. All right, guys, come on. Let's call it a day. I've gone way too long. I'll see you tomorrow. Okay, peace on earth. Oh, where's my mouse? Where's my mouse? Peace on earth. May the pips be with you. May our profits be above average. Don't forget to click the, where is it? Don't forget to click the Forex.Today logo. Watch all our other videos. Download the templates from the link below. Visit tradersway.com and open an account today. I will see you tomorrow. Thank you for being on my team.